Welcome to the Deep Dive. Today we're doing exactly that, taking a deep dive into SES AI's second quarter 2025 earnings call.
Yeah, this is a really interesting one. A company sitting right at that intersection of batteries and AI.
Absolutely. And, if you just glanced at the headlines after the call, the numbers, well, they look like a miss initially.
They did. Revenue and EPS both came in under consensus.
But the market reaction was pretty surprising, right? A pop on the stock. So clearly the street picked up on something more positive hidden in the details.
Exactly. There's a deeper story here.
That's what we're here to uncover. We'll distill the key signals and insights from this report for you. So let's maybe kick things off with those headline numbers first. Q2 2025. What did the report actually say?
Okay, so on the surface, SES AI reported revenue of $3.5 million.
Right, and the consensus expectation was higher?
Yeah, analysts were looking for about $4.33 million. So a miss there.
And earnings per share?
Also a miss. GAAP EPS came in at -7 cents. The expectation was -6 cents.
Okay, so on paper, yeah, looks like a miss on both the top and bottom lines. But like we said, the market reaction and definitely a deeper dive tells a more nuanced story.
Oh, sure.
What were those immediate bright spots that really caught investors' attention, making them look past those misses?
Well, despite missing on revenue, the gross margin was, frankly, pretty remarkable, 74%.
74%. Wow, that's high, especially for this stage. Where did that come from?
It was primarily driven by their battery materials contracts, deals with the big automotive OEMs, the car manufacturers.
Got it. Okay, that makes sense. What else stood out?
The cash management was huge. Cash used in operations, it dropped significantly, down 51% compared to last year and 53% just from the previous quarter.
So they're burning less cash?
Much less. Only $10.8 million used in operations for the quarter. And they finished Q2 with a really strong liquidity position, $229 million.
And importantly,
zero debt. That combination, strong margin, lower cash burn, solid cash balance, no debt, that kind of financial discipline really resonated. It suggests they're managing things very tightly while still pushing forward.
Okay, right. That paints a much healthier picture than just the headline revenue miss. Now, let's really unpack this, because beyond the financials, the strategic story that came out of the call was, I thought, even more compelling.
Absolutely. Management was very clear. They are doubling down hard on what they're calling a platform strategy.
A platform strategy, meaning?
Meaning they see their core value not just in making batteries, but in the AI platform that designs and optimizes them. The CEO specifically highlighted a major upgrade.
Yes, deep space.
That's the one. They're calling it an agentic upgrade to their molecular universe AI platform. And the claim is, it's bold. They claim it can cut battery R&D cycles from, and I quote, years to tens of minutes.
Okay, hold on. Years to tens of minutes. That's revolutionary, if true.
It's a massive claim. This new version, Molecular Universe 0.5, it's a significant step into AI agents. AI that can act more autonomously to solve problems.
So the implications there for the whole industry are just enormous. It changes the entire R&D paradigm.
Completely. It shifts the advantage from just capital-intensive hardware development to, AI-driven software and data.
And it sounds like they're already putting this AI to work in new areas, not just EVs.
Definitely. A huge piece of news was the acquisition of UZ Energy.
Right, the energy storage play.
Exactly. A strategic move to jump right into the energy storage system, or ESS, market. And that market is massive. They estimated it at $300 billion.
And UZ Energy brings immediate revenue.
Projected to add $10–15 million in sales just for fiscal year 2025. But the real kicker is the integration.
How so?
They plan to merge UZ's existing ESS hardware, the actual storage units, with SES AI's own Molecular Universe AI stack.
Creating a vertically integrated solution.
Precisely. Leveraging their AI for material discovery, LFP, sodium-ion, the chemistries needed for grid storage, and using their precise battery health monitoring system within those ESS units.
So the AI gets real-world data to learn from immediately.
Exactly. It gives Molecular Universe this instant sandbox. Real performance data, constant feedback loops. It's critical for refining the AI models quickly and proving their value in a tangible product.
That makes a ton of sense. It's not just theoretical AI anymore. It's AI directly improving a product they sell. So this ties into a broader AI journey they laid out, right? These stages of AI development.
Yeah, they outlined 4 stages, started with chatbot, which was Molecular Universe Zero, basically an internal tool for querying data.
Okay.
Now they're at AI agent with deep space, Molecular Universe 1.5. That's where the AI starts automating complex
And
R&D.
the digital scientist idea.
Then comes physical AI. That's integrating the AI with actual hardware drones, UAM vehicles like air taxis, and now obviously the ESS systems from UZ Energy.
And the end goal.
The revenue machine, leveraging the AI platform across 5 key streams: software and services, selling novel materials the AI discovers, selling AI-enhanced battery cells for different uses, offering EV development services, and finally, these comprehensive ESS solutions.
So the UZ deal fits squarely into those last two stages, physical AI and revenue machine.
Perfectly. It gives them immediate products and services to start building out that vision.
It's definitely an ambitious roadmap. But beyond the big strategy and the acquisition, what did they say about, the operational nuts and bolts? Are they actually executing on their existing plans, like with the car companies?
Yeah, they addressed that in the Q&A. Confirmed they're making steady progress on the EVB samples.
Which is that critical prototype stage with automakers.
Exactly, with partners like GM and Hyundai. Getting that B sample validation where the battery works in a real vehicle, that's a huge step towards commercialization.
Any other progress points?
They also mentioned growing revenue from their current AI-enhanced cells, the ones used in drones and urban air mobility, or UAM. So that revenue stream saw a significant increase this year.
Okay, so some existing business lines are growing.
And the CFO also flagged a share repurchase, bought back about 0.87 million shares in Q3 for around $1.1 million. A signal of confidence, usually.
And the full year outlook, did that change?
No, they reiterated the full year 2025 revenue guidance of $15 million to $25 million. And importantly, they reaffirmed their target of hitting positive gross profit sometime in 2026.
So they're sticking to their financial targets.
Seems so. They also confirmed they're still looking at M&A, specifically targeting specialty materials companies and sources of AI-rich data sets. Makes sense, right? Feed the beast, feed Molecular Universe more data.
Absolutely. Anything else on the AI platform itself?
Yeah, they mentioned they're currently trial testing Molecular Universe with over 30 companies.
30 companies, wow.
And the goal, again, pretty bold, for the platform to solve problems that even the best human scientists cannot. They also said the next version is coming soon, September, October, with even better cell-level prediction accuracy.
Okay. So putting this all together, what's the big picture takeaway for you if you're an investor or just tracking the battery and AI space? How does SES AI fit into that broader landscape?
Well, what's really fascinating is how they're positioning themselves differently.
Yeah.
You look at competitors in solid state or lithium metal, like Solid Power or QuantumScape.
Right. Still mostly R&D focused, targeting production later this decade.
Exactly. SES AI, meanwhile, is showing tangible progress and even generating revenue from its AI platform right now. They seem to be moving faster towards commercial applications, leveraging AI as the accelerator.
And the overall demand for better batteries isn't going away.
Not at all. It remains really constructive. You got tailwinds like the IRA, the Inflation Reduction Act pushing for domestic content, and you still have massive OEM range anxiety. Car makers need better, longer-lasting, faster charging batteries.
Which plays right into SES AI's potential value proposition with faster R&D.
If their AI can deliver, yes.
Yeah.
It addresses that core need for accelerated solutions.
So how did the market actually digest all this? You mentioned the initial pop, but there was some whipsawing after the call.
There was. The stock definitely jumped leading into the results, and right after, media picked up on it. 13% pop on eye-catching margin despite tiny sales. That kind of headline.
But then
it dipped a bit in after-hours trading. Now, that didn't feel like a rejection of the strategy, more like some traders wanting, perhaps, clear visibility on the order book for the second half of the year. More concrete near-term numbers.
Okay. But the overall analyst sentiment
Generally seemed cautiously bullish. Morgan Stanley, for example, they relaunched coverage with an equal weight rating, but set a $7 price target, which is well above where it's trading. And they specifically highlighted the platform's optionality.
Optionality, meaning the potential for the AI to open up lots of different revenue doors.
Exactly. So investors seem to largely shrug off that headline revenue miss. Why? Because of that strong 74% gross margin and the solid cash position. The street seems focused on the bigger picture here. The execution runway for this unique AI-driven platform strategy. They're looking longer term.
Right. So looking ahead then, what are the key catalysts? What should people be watching for that could keep driving this narrative forward for SES AI.
Okay, near term, Q3 is important. Watch for the official close of that UZ Energy deal that should hit the books soon.
Okay.
Also, look for the first commercial molecular universe as a service subscriptions. That's when the software revenue piece starts to become real.
Crucial validation point.
And any updates on those EV B-sample milestones with GM, Hyundai, etc., all expected in Q3.
And looking out a bit further into 2026.
Then you're watching for the ESS production ramps, getting those UZ Energy units integrated and shipping. Any additional licensing deals, either for the AI or for materials discovered by it, and potentially any wins from the Department of Energy loans or big tax credits. That non-dilutive funding is always welcome.
So the core thesis is, if they can turn this AI story into real recurring SaaS revenue plus higher volume cell sales, then it could fundamentally change how the market sees them. From a speculative tech play to more of an early stage growth platform, and that could definitely trigger a significant re-rating of the stock.
Makes sense. Okay, now let's shift gears slightly. It's time for our segment, This is Not Financial Advice. Remember, these are just some outrageous, maybe plausible trade ideas based on what we've discussed. Think of it as pitching to a hedge fund investment committee.
All right, let's have some fun. Idea number one, buy the August $2 calls on SES AI.
Okay, short-dated calls. Why?
Well, we already saw some big, unusual volume in those specific options contracts, and the thesis connects directly to the CEO's comments. He hinted at this game over moment, right? When Molecular Universe solves a problem that the smartest human scientists cannot.
The big breakthrough idea. Exactly. If, and it's an if, but if that breakthrough gets validated somehow and announced publicly in the next few weeks, maybe it's tied to an OEM B-sample success showing the AI's power, or maybe they land a major new customer for the platform.
Then the narrative shifts dramatically.
Right. That years to tens of minutes idea suddenly looks very real, the time to market compression becomes tangible, and you can see a massive re-rating that just blows past that $2 strike price. It's a high conviction bet on a near-term catalyst.
Bold. I like the catalyst angle. What else have you got?
Second idea, go long SES AI stock and short a basket of traditional battery material suppliers.
Okay, a pair trade. Playing the disruption angle.
Precisely. This is based on the longer-term strategic story. If Molecular Universe really delivers on its promise, dramatically slashing R&D times, finding optimized materials faster than anyone else, it fundamentally disrupts the old way of doing things.
The traditional, slow, lab-based R&D model.
Yeah, that whole ecosystem. So by going long SES AI and shorting those legacy material players, you're essentially betting that the value in the battery supply chain is going to shift away from traditional materials R&D towards this AI-driven discovery and optimization.
You're betting the platform itself becomes the key advantage, the moat.
Exactly. It's a bet that SES AI's AI becomes the core value driver, potentially making some of the traditional players less relevant over time.
Interesting strategic play. Okay, so to recap everything we've covered in this deep dive, SES AI's Q2 call, despite the headline miss, really painted a picture of a company making a major strategic pivot.
Yeah, showcasing surprisingly strong gross margins, very disciplined cash management, and pushing hard on AI innovation with that deep space update and the UZ Energy acquisition.
They're really positioning themselves as an AI platform company first that happens to be applying it to batteries and energy storage initially.
That seems to be the core message. Leveraging their unique battery data and these advanced AI models to try and accelerate the whole energy transition. The next few quarters are definitely critical, though. They need to show that revenue machine potential.
Absolutely. Which leaves us with a fascinating question, really. Can AI truly accelerate fundamental scientific discovery this dramatically? Enough to rewrite the rules of an entire industry like battery development?
That's the million-dollar question, isn't it? Or maybe billion-dollar question here. If AI, like Molecular Universe claims it might, can genuinely solve problems beyond human capability, then we're not just looking at a potentially better battery company. We might be looking at a whole new blueprint for how innovation itself works in the 21st century across many, many fields.
A profound thought, and definitely want to keep watching. Remember, everyone, the ideas in our This Is Not Financial Advice segment are purely illustrative. Do your own research before making any investment decisions.
Absolutely.
Thank you for tuning into The Deep Dive.